Good evening, guys. It is a good evening. Um, it's your boy was the Just, and today we'll be going over the trade I took on NQ, the March contract, between 7th of January 2026. And first of all, I'd like to thank my personal Lord and Savior Jesus Christ for bringing me here. It's been a rough ride, but He has seen me through. So, without any waste of time, let's dive into the intricacies of the matter. So, first off, I highlighted these highs that price we're going to seek liquidity above these highs, and that's what happened. And looking at these levels, I had highlighted that this was where price was running to, and as you can see, we are above it by now. We're finally getting to the high posted in November, right? There's a high that's posted in November. We have this with for high. I have a feel that this is where price wants to get to come February. So let me go down to what transpired today during my trading this afternoon, or I would say this morning session. So the first thing we have here is the opening range gap. So I did anticipate today to be a little bit choppy. You know, I did anticipate today to be a little bit choppy, as you can see. As you can see, price delved down, failing to get to the consequent encroachment of the opening range gap. Now, the opening range gap is a gap that is formed during the first 30 minutes of trading. It is the difference between the previous settlement price and the opening price at 9:30 when indices market opens. So as you can see, initially I was hoping that we could get to maybe half of the gap or maybe full gap closure, but I had to look at a greater confluence. Why? First of all, we just left a very steep consolidation. And during my pre-market analysis, I had this relative equal lows as a potential target during the market open. Had it mean we had not run these lows, I would have favored us getting there and then probably turning. So when the market opened, we have our first presented favorably up. I took a shot targeting mid gap, as you can see here. I was targeting mid gap, and I also had a very lofty ambition of say price wanting to get back down here. But what held me back was the first thing was we just left a very tight consolidation and prices expanding towards the upside. Therefore, there's a very high probability that price will not want to seek liquidity towards the sell side. So I had to reframe my bias once we went past the first presented fair value gap at 9:30. You know, so this was the manipulation and then the expansion. So I was only able to get in sync with the market here. As you can see, there's a fair value gap. I took an entry here, and this anybody that trade their stop too tight, say they got a hang of it here, right? Let's say they bought here at this fair value gap, and the price was currently trading here, and they trade their stop too tight. The market had a liquidity purge where we'll take out minor sell side so that we can actually trade for higher prices. As you can see, we hit this fair value gap colored outside the lines. Our stop was about here. I almost got stopped out. But when you've done this for quite some time, you have a feel for it, as you can see. And then price began to soar to a random level. This is the new week opening gap formed on the 3rd of November 2025. So it's important and it's salient that you keep these reference points on your chart so that you'll be able to know where price is literally drawing to and where price might likely draw to next. So I'm still targeting the high, I'm still targeting the high, this blue line here, but with having these footholds on your chart, you'll be able to know where turning points are likely to occur and or whatnot. And the session was pretty much choppy like that of yesterday. It was post 9:30. We actually experienced a high resistance liquidity run, and you have to be pretty skilled to be able to navigate those waters. Yeah. So I hope you found this one insightful. Until I talk to you next time, good luck and good training.